2020 and 2021, I shared that I am bearish on crypto. Crypto is a scam. Tesla is overvalued. Crypto and Tesla will crash more than 80%.
Okay, welcome everybody to episode 9 of the Backholder Pod. So I think Eric this time around is not with us. So he's out there on a holiday. So we have yet another special guest today with us. So his name is Master Leong, also known as ML. And just some perspective also before we begin. Maybe ML, you want to give like a short introduction of your own history and how you have been, or what you have been up to or what you've been doing.
So I think most people on YouTube who see me will be known me as the Alibaba Bull. Alibaba Bull went 1.5 times leverage and then face margin call and cannot punish. So today I'm here to share my experience and share on Alibaba also. Yeah.
Remember to smash the like button.
Like button. Yeah.
Yes, click subscribe alongside. Right, thanks. I think for long-time viewers of me and Bunti, we each did a collaboration video with Master Leong before. So if you're interested in the history of ML and stuff like that, you can probably go head over to our channel. So in this podcast, in today's episode, we have Chikeng, Bunti, Kelvin, and Master Leong. So I think before we begin into any of the macro topics or whatever, or any of the discussion points, right? So I know ML, you have been in a few of the investing groups and investing forums as well. And I've seen many of the commentaries like below, people commenting online, right? Saying that, hey, some of these comments are very offensive or very aggressive. So I just wanted to understand, like, from your perspective, how come so many people seem to like hate on you and so many people like to leave nasty comments like in your posts or even on your YouTube, etc.
Yeah, so actually I have a long history on the online forums because like 5-6 years ago, I retired as a professional card gamer. So I eat full, nothing to do. Every day we'll go on the Hardware Zone forum, talk, share about the stock market also. So for me, right, I'm kind of very childish and I'm very contrarian. I like to take a different view as compared to the herd. And my views sometimes can be very extreme. Like on the Hardware Zone forum, right, there was this blue chip company back then called Noble Group. That was from $2, it crashed down to 50 cents. Then people say, oh, this is blue chip company, can bargain hunt. Then I tell them that this is a fraud, it will go to zero. Well, because back then people thought Noble Group was a bargain hunt because the asset value was $2 and the debt is $1. So the NAV is $1, but the share price is 50 cents, half price to NAV. But I tell them that the asset, it is like overstated. The real assets is less than the debt and the company is worth zero. So I will chit chat and argue a lot with people. The argue got so bad that I even kena lawyer letter. People ask me to cease and desist. That means to take off my post and to apologize. But I take the letter, I throw inside the dustbin. So that is my attitude. I'm very quiet in that sense. Then people also make police report on me.
Are you not scared? Yeah. Are you not scared that like
I'm not scared? What my character is like that one. Yeah. So my character is like that. What I'm like once I have a conviction, I have a view, right? I'm super stubborn one. Just like Alibaba, who Alibaba on 1.5 times leverage. So my character is and personality is more the extreme type one. That's why people kind of get more offended. Then also for me as a professional card gamer, my whole life I only work 3 years only. So my social skills is very limited. I don't really know how to socialize with people. I only know how to chat a lot on the.
Yeah, but you can talk very well, it seems though. As in, at least on YouTube.
I like to talk. That's the same thing on investing note, because I eat full, nothing to do, every day post on the investing note, talk about the stock market. So on 2020 and 2021, I share that I am bearish on crypto. Crypto is a scam. Tesla is overvalued. Crypto and Tesla will crash more than 80%.
Actually, I think that would be a great starter. So I think for today's episode, for at least for the last 5 days, there hasn't really been a lot of major or new news, right? So I think in this episode specifically, we will kind of do like a mini debate on 2 specific companies that are of very great interest. So I think for Master Leong himself, he is 1.5 times leverage on Alibaba currently. I have around a 60 to 70% exposure in Alibaba. And on the flip side, I think for Kelvin, he's also pretty much quite all in into Tesla. And Bunti has 5% exposure in Tesla, if I'm not wrong, if I remember correctly.
I'm not all in. I think it's like 60% now.
60%
60%.
Tesla. Okay, same as me. So I think we can look forward to the discussion, and we will maybe split it halfway where we have a 40 minutes discussion on Tesla first, and then 40 minutes discussion on Alibaba. And I think just to lift the whip in this case, all the discussion is targeted towards the argument, not towards the person. So for those of you who are watching the video also, try to think through your comments and don't be too nasty, because it's all in light or in name of trying to further this discussion. I think, can we have that? We have the agreement, right? From Kevin Bunti as well. Okay, great. So I think before we actually go into the discussion or the debate proper, right? Just to talk a little bit about what happened in the macro, like just for the broad-based markets. The SPY for the last 5 days, it's down around 1.76%, and the QQQ is down around 3.38%. And I think Micron just reported earnings yesterday, which was actually pretty bad. So maybe for Bunti's perspective, do you have any insights for Micron? Because I think you're in the semicon and the space itself.
Not really insights because I haven't really followed Micron, but I heard that they are expecting much bigger negative profits, meaning that they are expecting a losses, which is higher than expected. So I think that one pulled the share price down. And they are announcing cutting of their staff, I think 10%, right? So when companies does that kind of things, meaning that they are seeing the demand is much lower. So I think quite like now it's down cycle for semicon. Yeah.
Moving over to Kelvin, right? I think Tesla is, I just opened the chart. Last 5 days, it's down 21%. What the heck is happening?
Yeah. Last week we can still say that Elon was selling, right? This week it doesn't seem like Elon is selling anymore. But I think it's that everyone is just pricing in a weaker economy and stuff lah. Like if a recession comes, there's no way Tesla can continue their 50% growth mass. I think so. That's why they are trying to like re-rate this whole Tesla share thing lah.
So in terms of like, just rather than re-rating, do you think it actually affects any parts of the fundamentals for the company per se?
Not really. The company actually is still growing. So so I'm not that worried yet.
I think in the past, we had some chat with Master also, Master Leong on Tesla, because we are seeing that the earnings has been good if you look at past 12 months, right? But the thing is, when recession comes, how will the financial looks like? So I think Master Leong has a very negative take on the upcoming financials, talking about 2023. So I just want to ask Master Leong, like let's say if Kelvin now is your friend, we are just chatting, and you want to advise him to go against Tesla, don't backhold Tesla, what will you say to Kelvin?
Yeah, before I say that, I will tell him the outlook for Tesla next year. I believe that the analysts, the general view is too optimistic already. So Tesla will be earning about $4 per share this year. And the consensus analyst estimate is that Tesla will earn $5.50 for next year. And some of the major Tesla bull, like Gary Black, they are super bullish. They say that Tesla can earn $7 per share next year. I believe all of them confirm will miss the estimate.
But ML, how you get to $4 per share? Like, how do you back test?
$4 per share. No, I just see the estimates. So yeah, because pre-split they were estimated to earn about $12 per share this year. The estimates. Yeah, so this is the analyst estimate, not my own estimates. I don't do any model on the
so
Tesla.
You mean they're just gonna normalize back into 2021 numbers?
So now the general consensus is that people believe that Tesla will earn even higher earnings next year. I believe that is false. Most likely Tesla will earn lesser. The earnings will decline.
Why is it false? Because if we just look at 2020, talking about this year, let's say past 12 months, they are earning about $1 per quarter, which is $4 per year already. And this is as of now. And next year, assuming they are not growing at, let's say 40%, let's say just 30% or 20%, right? The sales still go up. And then why would the earning per share will suddenly just stagnant or come down? What's the causes?
So my thinking is that because the margins will come down very sharply, way more than what the consensus is expecting. First of all, Tesla this year already cut prices twice already. Then, like, you know, the deliveries, last time you have to wait a few months. Now you just wait 1 week, you can get the Tesla already. There is no demand. So I believe next year, right, they will confirm cannot increase prices, either reduce price or hold it there. I believe Tesla will still do 1 or 2 more price cut next year. So it will eat into their margins. So even though they sell more cars, right, because the profit margin, they might even make no profit there next year, because competition is so fierce. And through my 14 years experience in the stock market, during 2008, I saw the global financial crisis. During recession downturn, right, people will spend on their basic needs. Like now, interest rate is 4% going 5%. So like you look at US, people when they pay for their monthly mortgage, in the past, maybe they pay $1,000 per month last year. This year, they are paying like $2,000 average per month if they are on a floating rate, meaning their loan is matched to the current interest rate. So next year, they will be spending more on their monthly mortgages. They don't have discretionary spending. They can only spend on food, spend on electricity. They don't have money to buy a new car. So demand will collapse.
Right.
And
Then
all of the EV companies, they will be lowering their prices. All of them, they will cut their prices, and all of them could be loss-making, like 2008. 2008, the whole auto industry, all of them was loss-making. GM, Chrysler, and Ford all went into bankruptcy, and 2 of them was built out. Chrysler now gone already. Now GM and Ford is still around. So my experience with a downturn is that automakers they will face a down cycle, and most of them will be loss-making. That's why I feel that the projections, the earnings for Tesla next year at $5 or $7 earnings per share is way too optimistic.
When you say demand will collapse, right? What do you mean by demand will collapse? I give you throw out some numbers. Take the recent quarter, their delivery is about 343,000. So if you just multiply by 4, we're talking about 1.4 million cars. So if they just continue at this rate, so when you say demand collapse, what do you mean? Like, is it like going to stay here or drop?
The demand collapse. So the example, the next quarter they're projecting like what 420,000 delivery or what so lah. But I think they will miss estimates. So once you see the deliveries, probably the early of February, like I think January the 3rd, you will see the Tesla deliveries, whether they hit or miss. I tell you, 90% chance will miss. The numbers are too estimate. I may be wrong, because I'm a Tesla bull, that's my view. So 90% chance.
Tesla bear.
Tesla bad.
Yeah.
Sorry.
I wanted to hear from Kelvin's perspective though. Like I think just recently
So I also believe next quarter's delivery will miss. That's my feeling like so like there's, I suspect there might be a reason why Elon Musk is selling 1 month ahead of earnings. Just a conspiracy theory. Maybe he knows that things are bad and he wants to front run everyone.
But I think we need to distinguish between this earning or so-called the delivery miss, because people might be expecting, let's say, 440,000 delivery. Then they miss that high estimation, but it's still growing. It could still grow at 20%, still miss the delivery.
So it's more like missing the analyst estimates.
Yeah, so I want to add on the delivery. So with delivery, the numbers is like just a target only. But we look at on the ground. Let's say because they already forecast in the future 2023 that they will sell less cars as compared to their projection. Because initially they tell you that they will be growing revenues at 50% per year. Confirm they cannot meet the target rate, because you look at the Giga Shanghai, they are cutting down on their production.
But ML, I just wanted to
cutting down on the capacity.
I want to defend in this perspective. It's true. I think there is a certain projection and expectations that are priced into the stock earlier, right? So, but there's a reason why Tesla is down 70% year to date though. Don't you think it's kind of priced in that, okay, we are expecting maybe a 30% or slow down 25%, and then the share price recently collapsed until like 120 something now. Like, do you not think that it's already priced in, or are you still do you still remain bearish on
it? So price in is a magic word. Just like Alibaba, when it crashed to $100, all the negative already priced in. Crashed to $80. Okay, negative all priced in. This is the bottom already. Then it crashed to $60. So we might think that it's priced in already, but there could be more worms coming out of the can, because like Elon Musk, this year very hype up on the Tesla. He talk a lot of positive so that he can sell at the top. So I believe that 2023 will be like a kitchen sink quarter then kitchen sink year. All the ugly things will suddenly spill out of Tesla. Example, another thing that I noticed about Tesla is their accounting. I really don't understand. Like the past 4 quarters, 8 quarters, their expenses is almost flat. Yet they are opening 2 new factories, Giga Texas, Giga Berlin. Then now the next year they got open the new at the Mexico or South America, another new factory. But they keep opening new factory, but their expenses don't increase one. So you might see expenses suddenly shoot up next year because they actually delay their expenses. They pop up this year earnings to look good. But that is an accounting thing. I have nothing to prove it. So don't be surprised if next year the expenses shoot up because of their ramp up in their expansion. Then that will eat into the earnings also.
Wow, but this one a bit conspiracy theory though.
Yeah, conspiracy theory. That's why I'm
Wait,
a
Kelvin,
Tesla bet.
Kelvin have
So
something to say?
y'all
So,
don't take my
okay.
word for it.
So I just want to say about the pricing in thing. So like based on my very bearish estimates, right? Tesla at around 130 should be around at the correct price lah. And I feel that the reason why Alibaba had crashed previously had nothing to do with the company itself. It's just the government trying to do funny stuff. That's why it's pricing in the government that's not related to the company lah. And in Elon Musk's case, I'm just trying to price in like future value, just discounted back all the way to the current value, and it's still at 130 lah. So to me, like anything lower than 130 should be considered a good buy. Not for the short term lah, for the long term at least lah. And for next quarters, even though there's a lot of bad stuff happening, right? The first thing that might be bullish for Tesla is that there's the 7,500 tax credit. So some people will start to buy next year. Then the other thing is that Tesla is a premium car, and like based on past stuff, premium cars hasn't really been affected that much. Like if you see people who can afford to buy a Tesla, right, it's not really poor people. It's basically like rich Singaporeans, that kind. So I feel that like recession doesn't really affect them that much. And those are the people who doesn't care about like food. What can I eat food tomorrow? Those kind of people. So I suspect that deliveries will drop a bit. Misestimates lah, not drop. And it might not be as bad as we think lah. Yeah, that's what I feel.
Yeah, maybe I can share the Tesla bear view, because my view is that 2020 and 2021, wow, everybody all in Tesla, all in crypto, quite big. So there's a lot of those crypto millionaire, Tesla millionaire. So when they make a few million on Tesla, what they do? They buy a Tesla car. So these are the so-called rich people. And what I read through my own due diligence, like I read on Reddit. So a lot of people, right? Because in the US market, if let's say you 10x on Tesla, but if you sell it off, you have to pay a very hefty capital gains tax. So a lot of people who quite big and became millionaire on Tesla, they did not sell their shares. Instead, actually, they pledged their shares as margin into those investment banks like Morgan Stanley, Citibank, all this. So through their margin facility, they actually draw down, they borrow money to fund their lavish lifestyle. So now we are looking at Tesla, it's like a downward spiral. It's because of the margin call. They already have heavy borrowings, and now because of the sharp decline, that's why they are forced to sell out their shares, just like how I faced my Alibaba margin call. Then as for the fair value of Tesla, is very subjective. I won't disagree because I don't fully understand Tesla. I also don't know what is the exact fair value of Tesla. But if I look at Adam Khoo, the video, he also estimates the fair value is like 130 to 140. So at this current level, Tesla may be fairly priced, but I don't feel it's a screaming buy or a screaming undervalued. But the problem with Tesla, right, like the stock price and fundamentals is dislocated. Then the stock price now is heavily sentiment driven, and I would say now we are in a phase of capitulation. So people are selling because they have given up. Like this morning, I see the Twitter, the Chicken Genius, he put 7.5% of his portfolio into Tesla. Then don't know why he say he sell half. He expects Tesla to fall further. Well, then if you are the 300,000 subscriber, the follower, you see already, you're so scared. Then you also think you want to follow Chicken Genius.
I think you are, so basically now you're on the topic of price sentiments and how the narrative around the company, right? Like people are selling down the price. But if let's say I really want to look at it like from a long-term investment perspective, like I really want to buy because I think there's huge amount of tailwind, the business is strong, the demand is there, they're gonna have growth rate, even though it's not 50%, even a 20%, modeling out a 20% growth rate, sitting on a huge tailwind, it's quite easy to hit those targets too. So I was just wondering, like, is Tesla really not a buy? Like in ML's books, like it will never be a buy.
For me, there's one saying by Warren Buffett and Charlie Munger. They were asked in the annual general meeting, will you consider buying Tesla? Immediately, Charlie Munger and Warren Buffett say no, but they never give further detail. Charlie Munger said two things: I will never buy this company. But I will also never short this company. So, but they never elaborate because they don't want to offend Elon Musk or the Tesla bulls. But my interpretation as a value investor is, one criteria when picking a company to invest for long term is the management, whether the management is honest. Oh, so do you believe in Elon Musk? I don't believe in Elon Musk. I believe that he always play out his followers. I don't trust Elon Musk, so I will never buy Tesla. But if you trust Elon Musk and you believe the fundamentals of Tesla, go ahead and buy. Yeah, I just am a contrarian.
Can I add here? Because I think that what you have just shared just now, right? Talking about like Elon Musk, talking about all these stuff that Munger said in the past, all these are mostly narrative, right? This is not really like a hard numbers. Like even the expenses number that you just shared, right? You said expenses, how come they can still build 2 gigafactories and then the expenses is flat? I mean, from someone who haven't really looked into the details, they might think that, oh, actually, Master Leong has maybe pointing out something that I missed in the past. How could it be possible? You are building so much car, your expenses fixed. But I mean, for those, I think it is a very small proportion of people who actually go into the financial statement and look at the numbers. Let's say for 2020, their expenses is about 4.6 billion. Then 2021 is 7 billion. 4.6 to 7 billions, but I'm talking about 2020 to 2021. Isn't that an increase? Although from 2021 to 2022, is the increase in terms of percentage isn't as big. But still, if you look at the past 3 quarters versus last year, same quarters, right? The 3 quarters, it still went up by 10%. So I think this is why I would say try to differentiate between narrative, which is story that people tell you, hey, actually, you see the financial looks scary, expenses doesn't go up, but you look at the numbers, hey, you went up there. So what, you want to like counter me on this?
Yeah, so like the expenses go up, but like say for you, like, oh, go up 10%, 20%, you feel that it's meaningful, that it is reflected. But for me, it's like they open so many factories, then the cost, I feel that should be much higher. So it's very subjective. Like for me, I feel that the expenses is like not fully shown. But for other people that they feel that these numbers, it looks okay. So it's
Actually,
like different view.
If I can opine on this, right? So I'm not a Tesla bull or bear, so I'm pretty neutral and I'm studying the company in my own personal capacity. From what I've read and even looked through some of the experiences from like Tesla employees, so all these people are working there, right? They're saying that there are many changes in a very short span of time. So they'll always try to find the most efficient way of doing things, like in the physical space, and they can have, I don't know, 20 iterations in like a week or so. So from that perspective, I think like cost cutting and trying to drive down costs is actually one of their utmost priority. So I can't really say for sure that whether is it accounting fraud or whether they are so efficient in terms of their controlling their cost controls, right? But I would presume that since given many of the accounts of the interviews, right, it does seem like there is a like I think actually Elon is also quite a micromanager himself. So that's from what I read from people's accounts. So there is definitely this possibility that he is achieving scale and he is able to ramp up at such a low cost compared to other companies that are much more bureaucratic, a lot of layers and all those sunk costs in between that flows into the statement.
I want to echo you on this because I think judging from what Master Leong just said, right, it's as if like there's only 2 scenarios. Well, one scenario is that, yes, I see that their expenses is going up a lot, and then they are not making a lot of money, hence it is not a good buy. Or the expenses, because of all this improvement they have been making, so they show a good margin, numbers looks good, growth looks good, it cannot be true. It is not a buy. So it's like you are oscillating between these 2 and always it's not a buy. Is that something like almost like a prejudice against Tesla already? Or is it like help out with your story?
Yeah, so because I'm a Tesla bear, so I must have more convincing view. But for me, right, when I look deeper at the company, a lot of things don't match up. I get very conflicting things. Like Elon Musk say they will grow Tesla at 50% revenue per year. Am I right? This one is his statement. But look at the news. It says that Tesla is doing cost cutting that Chicken just mentioned. They are laying off workers. You want to ramp up, you have 3 new factories. You should be hiring more people. But now I see the news on the ground situation, they are laying off workers. So that's why I believe that we will not see the numbers being so beautiful as what is projected. So my view is different.
I want to be more careful with this 50% expectations, right? Because you need to also take into account the context that was said. So when he was projecting 50% year on year, every year for the next, I don't know how many years, right? And say that, oh, by 2030, they'll hit 10 million. That was when the Fed was still printing money. that was when interest rates were still relatively low and the liquidity is still there. So when we are going to a tightening cycle and then you say that, oh, just because you last time say 10 million, now you cannot change your opinion. I think that's also a bit too high a bar to say that, oh, because you say before, like I think that time.
But recently, only in the most recent earning calls, Elon Musk said that Tesla will continue to grow and the market cap will surpass Apple plus Saudi Arabia and Micron.
But that I
But
think
he
I
didn't
have
say when.
Yeah, he never
But
say
he
when.
doesn't say when. That's
Yeah,
why it's very
correct.
subjective. There's no number. no fixed date.
Right.
Date.
Actually, I want to
So
shoot.
I may be wrong. I may be wrong. Yeah, but that's my view. That's maybe different people will interpret it differently.
Right.
Yeah.
So about the laying off, yes, I think it's true that they are I think it's just cost cutting. You can say that it's unethical or whatever, but I can say the same thing about like Alibaba, Google, whatever. All the companies are just cost cutting because they have overhired last year and they just want to, like, I personally feel that it's better to lay off instead of keeping people that you don't need right now lah. It'll be a better choice lah. But what do you think about the long-term prospects of Tesla? Like, will Elon always, I know that Elon will always play this role of like disturbing the shareholders or whatever. But I do think that Elon is still on the side of Tesla and he's still on the side of EV. He's still on the, basically he wants to save the world or whatever lah.
I've been recently considering, right, like for the long-term prospects of Tesla. I wanted to circle back to a point that Kelvin just now talked about, which is Tesla actually operates in the luxury segment. And then luxury products usually tend to be more demand inelastic, like LVMH, for example. So you see that even in this tight recessionary period, LV still keeps growing their top line and even projected outwards is going to be good for 2023. But I would like to be more discerning when using the term luxury. Because personally, in my own assessment, I don't think Tesla is a luxury product. I think it's a premium product. It's not a luxury product. So the difference is luxury is up there and then economy is down here. So premium is in between. So usually the people that actually operate in this premium category, right, tend to be in the middle or middle upper class. And yes, I agree that there are a lot of billionaires that drive Tesla as well. Yes, I have no qualms against it. But when it's getting tighter, right, like when people's pockets start to shrink and everything, that kind of demand might really just collapse. I wouldn't say that it will go into negative, but really from 50% might really just drop to 20% because of that tight collapse if it's in the premium market. So this is my own assessment. I just wanted to hear like whether you all share the same sentiments or not.
I think this one really depends on what kind of time frame that you are talking about. Because if you're talking about next year or the year after, like the coming soon one, right? If we are going to get into recession, I think things can get ugly. Growth drop to 20%, 0%, even negative. I think this is something that could happen within a short period of time. But if you look at longer periods, say 5 to 10 years, then the question is not about whether Tesla will make it or not, whether this premium segment will make it or not. But it is the other question is whether EV will take over the ICE car or not. I think that's the question that we want to ask, because assuming like 5 years later, right? So now you're questioning yourself, not like now people when they buy EV, they will ask like, where should I charge my car? Like there's this anxiety. But 5 years later, you may ask different questions like where do I find a petrol station? So if all this battery technology R&Ds can bring the cost down enough, and then we all know that EV is like confirm the future, then people will be busy like building all the charging port rather than petrol station. So everyone will move there, like at least for the new car. The ICE car on the road will stay, people will still continue to use it until you cannot use it anymore. But nobody will buy new petrol cars, right? That's what
similarly,
I'm
right?
looking at.
If let's say Tesla really want to, because like Kelvin suggested, right, the mission of the company is to achieve a sustainable future, right? So in order for a sustainable future, everybody needs to change over to an EV. So you have bulls saying that by 2030, you have 10 million, 15 million, 20 million cars delivered or sold. And today, there's 10 million cars in the world. And the biggest one is Toyota, which is delivering 10 million. And I just Google, right, Toyota average selling price is like 29,000. And they can't even have enough people to keep bumping up the growth rates, right? So in this case, at current Tesla, I think the average selling price is around 45K. So in order for them to hit the critical mass, they need to keep decreasing prices, which is what ML suggested in the first place, right? So then also means that when price keeps coming down, means your margins keep getting compressed, unless your cost comes down as well, which is what Bunti is saying that, okay, if battery tech, if raw materials, if your cost of manufacturing comes down, I agree, but then is the current margins even sustainable in the first place?
I think you need to look at it from like, it's not like they are selling Model 3 and Y now, and then they need to take these two cars and keep reducing price every quarter. It's not like that, because in the future, it could be like 2023 or 2024, there will be a lower tier. It's just like in the past, they're always selling the Model S and Model X. Then now they have the 3 and Y. So 2-3 years later, for sure, they will have to launch a cheaper tier, and with cheaper tier, maybe like smaller battery capacity and so on. So you also cut costs on that, meaning you shrink the cost, you shrink the price. Margin wise, I think it will go down, but the sales should be enough to offset, meaning that instead of earning, let's say 10,000 on like 1 million's car, now you might be earning 6,000 on like what 5-8 million's cars, right? So it will be different. You cannot just, okay, I think two things people did wrong. They can assume that, okay, they keep how much profit they make and just ramp up to 20 million. I think this one is like unrealistic bull case. But people who say that, okay, you keep your current costs and then you just string your price, hence your margins drop, gross margin drop from 30% to 0%, then you become a loss-making companies. Also is wrong on the other sides, right?
Yeah, so I want to add about Tesla is what I feel is that a lot of people still think that Tesla is the technology leader and it deserves the high margin. But my view is that Tesla is no longer the technology leader. Like we talked about just now, the ICE car versus EV. So for me, I'm a layman uncle. I don't know what's the difference between ICE and EV. For me, EV, I look at two things: full self-driving and battery technology. These two are the ones that stand out and help me differentiate between why I want to buy an EV versus why I don't want to buy an ICE car. So for full self-driving, Tesla feels to me is still stuck at level 2 self-driving. Whereas in the US, Waymo is already level 4 full self-driving and doing some testing on their robo-taxi. Baidu is also doing level 4 full self-driving in the tier 1 cities in China with a fleet of 40 robo-taxi. Then for the battery technology, if Tesla is so advanced, why are they buying battery from BYD and CATL? So my bare thesis is that Tesla is not the leader in battery and FSD. So in the coming competition rising, right, Tesla 1 or 2 years ago, the market share 80%, now it's 65%. So Tesla, although the EV market will keep growing for sure, 10-20 years later, nobody drive the ICE car already. Everybody moved to EV. But Tesla will not own 50-60% of the future market share. Maybe they only own 10 or even 20% of the market share of the EV industry. So far, the market has priced in that 100% confirmed Tesla will be in the top 3. But whether or not Tesla will be the dominative player 10 years later, I have doubts because I am a Chinese investor. I research the Chinese market very heavily. My personal view is that the Chinese EV players have a very strong advantage. They can come out with the same specifications as the Tesla, but at half the price. Why? Because they control the entire chain supply. Tesla, they only design and manufacture car, but a lot of these Chinese companies, they have investments in like South Africa. They own stakes in the mining company. Like you want to build a battery, you need to nickel, cobalt, and lithium. But where you get it? 80% of all these raw materials are controlled by Chinese companies. And Tesla, because they don't have the chain supply, they have to take the market price of these raw materials. So if the raw materials, the prices are high, Tesla gets hurt. Whereas the Chinese players, because they own the upstream, so they are unaffected by the commodity prices. So my view is quite different in that
Kelvin,
sense.
what's your perspective on the FSD and the raw materials one?
ML just mentioned about for EV, the attractive point is the robotaxi and battery tech, right? For battery tech, I think Tesla has no choice because like obviously BYD has the better battery. That's why he has to buy there. So, but for robotaxi, I would say that, okay, for Waymo and Baidu, they are doing FSD. I mean, they are doing robotaxi at certain regions, right? So if we were to say like for Tesla, I would say they have an advantage here because they have more miles they are not trying to solve for a specific region. So they are just trying to solve for general autonomous driving. So if they wanted to, right, I believe they can easily just deploy their robotaxi in certain regions that are already well documented. Because if Waymo and Baidu has lesser miles than Tesla, then definitely Tesla is able to do it already. Then as for future, right, it's back to the same argument. So Tesla is not just a car company. It's also FSD, which they are collecting. Maybe they won't launch it for the entire world, but it would definitely launch it for certain areas, like what Waymo and Baidu is already doing. So at least they are able to take advantage of certain regions already lah. Then we have also not factored in what all those insurance, AI, robotics, semi, Cybertruck, or budget Tesla car. So I believe, yes, Tesla will lose market share, but all these things that have not come out yet will come in sooner or later that will offset all the losses.
I want to ask Master Leong, you know, Tesla FSD, right? They've been doing this, like they roll out this FSD. There are 160,000 people who actually like bought the cars and have the FSD. Whether they use it or not is different story. 160,000 cars on the road that anyone who has money, they buy. Not anyone, I mean, mainly those in the US. They already bought the car, they already tried it, and you just Google on the YouTube, you can look at like so many videos, so we can see that stuff that is working. So my questions to you is that we heard about like Baidu, Apollo, they're having good progress when it comes to their autonomous driving. But how many people actually bought a car with all these Auto X or Baidu or whatever cars technology in China that they really have the car and running autonomously? How many?
Yeah, so I will agree that Tesla has the most data because Tesla had the head start, and they are like the market leader. Like I tell you, they have 65% of the market share. So they will collect the most data. But the difference that through my research is that they're using different technology. Like Tesla, they are using camera technology, whereas Waymo and the Baidu, Apollo, they are using the LiDAR technology. So Elon Musk, in the beginning, they also got tried using LiDAR, but in the end, they dropped off LiDAR because Elon Musk believed that the cost is too high. So basically, for Baidu and Waymo, they are actually burning money. They are loss-making in order to make their robotaxi run. But they believe that in the future, 5 years, 10 years later, the LiDAR will be much cheaper and they can attain profitability. So they are losing on the data front, but they are using a very different kind of technology. Like for Tesla, they're using camera technology. They are trying to train their AI to be more like human. I think the MHKB, they recently got a video. He showed that live on the spot, 20-30 minute video, he do the Tesla full self-driving. So
you haven't answered my questions. Like how many cars on the road in China using Apollo that people
so definitely, like I said, Tesla has most data, so definitely much less than Tesla. Maybe just the data is just 10% or just 5% as compared to the Tesla in terms of raw volume. Because their fleet, although they have the robotaxi, 40 of them is now running on the ground. They also have, I think, a few thousand that is due, but it's supervised one. It means got people inside to supervise. So only a few thousand vehicle only. Whereas Tesla is like 100,000, 50,000 vehicle on the ground every day collect data. So Tesla, the data advantage is very massive. It is confirmed in the front in terms of the amount of data. But how you use the data, they are using it differently because their backbone, their technology is different. Like the Tesla, if I go very nerdy, they're using HydraNet. HydraNet. So you go and Google what is HydraNet, what is the AI, how it wants to be like a human like that, how it keeps the learning. Whereas Chinese, they're using their own different type. Waymo and the Baidu, they are using the same type of thinking, same type of the backbone. Yeah, that's why theirs is towards the LiDAR. Yeah.
I asked this, right? It's not to point to you that Tesla has a lot more data. But I think this one no need to. I think everyone knows it. They capture so much data. They have the data. The reason I ask this is because you when you watch your content, you watch both the Western YouTube, you watch the Chinese one, and you come to a conclusion that now Chinese autonomous driving is better than Tesla. That's your conclusion. So my questions to you is more like, if the Chinese version could be like Waymo or whatever. Actually, Waymo is not Chinese. Auto X and Apollo. If these are so good, right? How come only like 40, 51,000 car. Why the number is not like much bigger? 10,000, 100,000, 1 million car on the road that is like using all this autonomous driving. Why they are none?
Yeah.
Yeah.
Well, I got read the Baidu their annual report and I got follow their CEO, the Robin Lin. So he got explain if people, that's why you see Baidu, the stock price is very depressed. It's like half the market cap is cash. People are not excited of their robotaxi growth story because the CEO explained that there is no growth story for robotaxi. Robotaxi, because it's highly regulated, like you do online e-commerce, more people buy, then you expand rapidly, like you see can 100% growth rate. For robotaxi, right, it's highly regulated. Like for China, right, now they give them 40 robotaxi license only. So if they are successful, then the next year maybe give 400. Then can only expand incrementally because their growth is actually kept by the government because they are worried of safety, all this. So actually robotaxi, a lot of retail investors think, wow, in the future, 5 years later, wow, all the uncle taxi driver all gone, all become robotaxi. Actually, it won't happen. Maybe need 20 or 30 years because a lot is the government regulation and the safety.
Yeah, isn't this a good evidence to show that although they have been showcasing that so good, their autonomous driving working well, but actually when it comes to usage, when it comes to ramping up, they are like, wow, super cautious, like no confidence at all. It's like, oh, mine is good, but actually I try to limit. You shouldn't use it. Because if that technology, like whatever Apollo technology is that good, why not just scale up and just like really showcase it, right? Why so cautious about it? Do they actually have confidence on their own technology or not? Yeah, I will stop here on this topic.
That one I really don't know because maybe that one have to go on the ground in China, then we know. Could be maybe the technology still need a lot of fine-tuning or that government regulation. Yeah.
I think we I can kind of close the Tesla chapter. Like, does anyone has any concluding arguments before we close this part?
Maybe just one small point.
Sure.
Just now we didn't discuss about the battery technology. I think Master Leung just now mentioned that Tesla are no longer leading in terms of technology. Then you pointed out battery and autonomous driving. I think the battery side is not like they were leading in the past. Now suddenly CATL and all these BYD suddenly just become like much better than Tesla. It's not like that. From the beginning, this battery is always something that Tesla want to get more, but they cannot get. They have been partnering with Panasonic, with LG for many years, and they are still continue to partnering with them. I think there's rumor that talk about they will source for battery from I think it's either already or it's like will be like sourcing for all this battery from Chinese players like BYD, CATL, all this. So it's nothing new there. It's like it has always been like this. And if you go and do some research on which battery technology is better, I don't think there's a clear winner. I think they are like more or less like there's some advantages depending on which parameter that you look at. So I just want to point out that it's not like other people now suddenly become better, right?
Kelvin, do you have a concluding argument?
Short-term wise, Tesla doesn't look good, definitely. I wouldn't be surprised if it goes below 100. But with that being said, this is just affecting all the companies. All the companies are basically, Amazon is down. I wouldn't be surprised if Alibaba is also down because of if a bad recession comes. So I think if you are bullish on Tesla, just take it as a big sale to buy more because overall, even though I'm bearish in the short term, I'm still bullish over the long term. That's all I have to say.
I think just a concluding thought also, when Tesla was having a good run like in 2021 or back in late 2020 or so, the risk is not so much talked about, right? Everybody's talking about the potential, the future, the growth story, the narrative. And then when suddenly the stock price come down, then everybody suddenly wake up, China actually seems to be a pretty big risk. I think I've been touting this China risk for quite some time already. I even had a collab video with Darren the other time asking him about what he thinks about the China risk to Tesla. So whether is it from suppliers, whether is it to manufacturing, to competitors, to government, I mean, all these are all just umbrella under China, right? So yeah, it's good to really dive deeper into your investment risk also to protect the downside. Don't always think what's the upside, how many times I can multiply this investment. So it's a good transition also, speaking about China. So I think we have two big China bulls in this Zoom meeting. So namely me and ML. Or maybe I can kickstart. I can kickstart the discussion on.
Yeah, you attack yourself first.
I wouldn't say really attack, but I would like just to express some concerns, specifically to many of all these big tech names, right? Like Alibaba, Tencent. I've been following their quarterly earnings, at least for the last foreseeable quarters, like 3-4 quarters. It has been bad. Like bad is an understatement. So 2021, we all thought that the China tech crackdown, very jialat, Jack Ma go missing, wow, everybody don't allow kids to play games. We thought those are bad numbers. And then I think for last year, Alibaba still managed to grow like 19% year on year. I think that's not a very bad figure. I mean, compared to 40%, 19% is half lah. Then this year, actually, they're on route to do 0% to 3% based on analyst estimates lah, to end of the year. So are you not concerned when you have 1.5 times leverage in Alibaba and then they show you a -% year on year or a 0% growth?
Yeah, so I am concerned because like China already bear for 2 years already. I keep thinking the worst is over, but the worst is never over. Like even now, I'm short-term negative on the China market because now China on the ground is in a mess. You see the hospitals are overwhelmed and also medical supply not enough, and people are not going out to spend because they are afraid of being
Can I
infected.
cut in a bit here?
So earnings might be bad for the coming quarter.
If I look at the emotional cycle of every investment cycle, when a big Alibaba bull is also getting like in disbelief stage, right? I think you can go and chart out at what price we are at now. But okay, sorry, ML, please continue.
So short term, I believe like the fourth quarter results will be bad due to the disorderly reopening. So then maybe and then we have Chinese New Year, January 22 ahead. Then people, because they are trapped for 2-3 years, they will go back and visit their parents and their relatives. More people will be infected. So December, January, February likely is very high infection, very disorderly. Then the fourth quarter GDP, first quarter GDP for China could be very bad. So short term, I'm also bearish, and that there could be a possibility that Alibaba could crash again. Like in March, Alibaba crashed to $70 level. I faced my first margin call. Then recently the Xi Jinping re-elected, crashed to $60. I faced my second margin call. So at the peak, I have 14,000 shares, 1.5 times leverage, because I have never seen such a blue chip big tech company so undervalued. So I all in 1.5 times leverage because my risk appetite is the maximum. Although my age is going 40, but my risk investment profile is actually same as you, Chiking. I invest like I'm a uni student. Young and dangerous, all in, then kena punish. Yeah, but the way I invest is I only invest what I can afford to lose. So if my portfolio really China invade Taiwan, my Alibaba go to zero, my life still continues as normal without my stock portfolio. I still go hiking, I still watch YouTube, I still play game,
right,
my simple activities. Yeah.
But you haven't really answered the question though. So like how long are you gonna give Alibaba to recover? So we know that China recession gonna come, right? Then how many more quarters of bad results?
So I actually, to be honest, if you ask me, am I frustrated or not? Of course, I cannot be saying, what, 2 years back already, you're not emotionally affected. Confirm emotionally affected, right? So usually bear market, like my previous experience, global financial crisis, 1 year bear market only. But this time already 2 year bear market. If next year, the end of next year, Alibaba still below $80, I tell you, I give up already. I might really give up.
But that's a price narrative, right?
Bear already, yeah.
Right. But I'm talking about like
the fundamentals,
Yes.
Also the fundamentals. But like you see that based on analyst estimates, now they are projecting that the forward earnings is like $7.50 for Alibaba. So at today price is 11 times price to earnings. So earnings definitely is projected to be higher for next year as compared to this year. So let's say the earnings don't recover and the stock price is below $80. Then I'm trapped in Alibaba for 3 years already. Then mentally I might give up. I don't trust the financial system already. I sell everything, become cash, keep inside my pillow. But
like you said, for Tesla, right? You don't believe in the earnings of the analysts, right? So we shouldn't really believe in the analyst earnings for Alibaba as well, right?
Yeah. So just now I tell you there's the analyst expectation now. But the way I look at earnings, like my previous, we had the discussion with Bunti on his channel. I got to tell you, for me, I look at the earnings, I strip off all the one-off item. I believe that the core recurring earnings is $2 per share per quarter. So they're making about $8 per share. So at current stock price, that's about 10 times core earnings. Then I believe that now we are in a bear market, so we are at the lowest end of the PE multiple. So like you mentioned before, PE expansion. In the normal market, Alibaba as a big tech could be worth 20 times earnings. So Alibaba should, in my projection, if market is more sensible and wake up from its idea, Alibaba can trade at 150 to 160. But that is if earnings recover and the valuations recover. But we can have another year that earnings remains depressed because of the weak economy. PE multiples remains depressed due to the weak sentiments. Then Alibaba is stuck at the $80 level yet for another 1 year. Then I'll be very upset also. Yeah. But there's nothing I can do. Yeah.
I want to ask you, because I think you are in Alibaba for quite a number of years already, at least 2-3 years, right?
So Alibaba, I went in at late 2020. So
Okay.
now 2021, 2022.
2 years long, 2 years.
About 2 years.
2 years. 2 years. 2 years.
Okay. So if we look at the price when you went in, like beginning entering Alibaba, it was about, like, let's say $200, $300 that range. But at that time, if you look at their revenue growth, it was still growing at 30, 40, sometimes even higher than that if you compare to a low quarter 1 year ago. So if I just look at the growth rate, basically it's about like 40% plus. But now if you just look at the past recent 2 quarters, their growth rate, right, their top line growth is like down 3.7% and down 6.5%. So if we look at earnings, of course, there are a lot of things that you can strip out. You can say, oh, those investment, investment is not their core business. We strip out everything. I think that one is justifiable. But just look at their top line. Their top line is no longer a growth stocks. It's no longer growing at 30, 40%. Now become like a negative 3-7% kind of growth rate. So don't you think that now with this much lower growth rate, it actually justify whatever valuation that we are looking currently, meaning that now price, talking about, let's say $90 compared to 200 plus, it's like down more than 50%, right? Don't you think this is justified just because instead of like pricing in a high growth rate, now we are pricing in a low growth rate? And the fact that 1 year ago, 2 years ago, we didn't appreciate that this negative growth would come so soon and so severely means that you were wrong. Don't you think that you were wrong?
Yeah, so like now, market, like I mentioned, they're factoring at a low multiple and a very bearish earnings estimate. So my big mistake is that I didn't expect the so-called recession to be so deep. So China, you look at the GDP, they project this year GDP 2.8%, 3% growth. But fundamentally, it's already in a recession because they used to have 6, 7, 8% growth rate. So when the GDP growth rate is down by 5%, right? The on the ground situation is people are not spending money. It's now actually quite a deep recession in China. The GDP shows 2-3% growth rate is mostly because of the infrastructure projects, or they build all those bridges, train stations, shipping ports, all this to juice up their GDP. But consumer spending is actually negative growth. Property is also 15 months in a row of decline. That's why for Alibaba, right? Also for Alibaba or any other company, when faced with a down cycle, a recession, so through my experience like the global financial crisis, during a down cycle, most companies, the growth is negative. So for cyclical industries like property, automakers, usually they become loss-making. That's why we see like so many property developers going bankrupt. And same during the global financial crisis, US developers go bankrupt. So the fundamental in China is actually very bad. Many property developers go bankrupt. So actually, when your revenues and your earnings, if can hold it there during a recession, is considered, in my view, defensive in that sense. Yeah, because you see a lot of Chinese companies, some of them will really go bankrupt one. Because those listed companies, they still can raise capital to stay afloat. But actually, a lot of small and medium companies actually closed shop and went bankrupt, especially the physical shops in the shopping mall. I think like the deregistrations of companies, I think like 20-30% of those small companies, they got deregistered. So it's very bad. But then what I like about Alibaba is that I don't see the valuation purely from earnings, because I use the valuation method is quite different for Alibaba. It's like sum of parts. Like I mentioned before in your channel that they can pay out a $25 cash dividend and still operate normally. So they have a lot of cash. They also have the 33% and financial stake. Then they have a lot of hidden asset into the company that is not reflected to the public, because, example, like the top 5 unicorn in the world, number 1 is ByteDance, number 2 is SpaceX under Elon Musk. So Elon Musk might IPO it to raise cash to save himself also. So number 3 to number 4 is all under Alibaba. Number 3 is Ali Cloud. Then number 4 is the Cainiao. Number 5 is Lazada. So all these, they are actually very powerful unicorns that Alibaba can in the future IPO and unlock value. So I'm betting on the future. But the short term, I cannot punish because like the like, if to be truthful, the revenues and the earnings, when it reported, I was shocked. I didn't expect it to be this bad, because I didn't expect the Chinese recession, so-called downturn, to be this bad. Because the lockdown, I didn't expect it to lock down 3 years. Who can so stupid one? Why it should be like Singapore, lockdown 1 year, second year open up already. Then they keep doing the zero COVID. I see already also dulan. Why the SJP, they don't want to open up in the second and third year? Then open up. They don't open up properly. Like in Singapore, we have phase 1, phase 2, phase 3, a very organized reopening. That's why the STI is still holding up very well, above the $3,000 level. So China should actually follow the Singapore playbook. But China, it is very bad because of politics. That's why there's this political risk. For Xi Jinping, he wants to win the election, so he will do zero COVID. He don't want millions of people to die.
Why are you still invested though? Cause like last 1 minute, right? You have been talking about how bad the COVID is, how bad the economy is, how bad the politics is.
Despite how bad, I'm still vested because it's still super undervalued. 14 years in the market, I've never seen such an undervalued company, because I started buying at the 240 level all the way down to the $100 level. So at the 240 level, during that time, because they failed the M Financial IPO, then I do sum of parts. I believe the fair value was $300. But now, because of all the weakening in the fundamentals, like the e-commerce business due to the slowdown, so I readjust, lower down my valuations, but I still believe the fair value is easily 200 and above. So at the current market price is still 50-60% discount to the fair value. So it is still very undervalued. Despite I myself, I downgrade the fundamentals.
No, I think the question I want to ask is that just now when Master Leong tried to explain like Baba result is bad because of the recession, because of China economy, all these things, sounds like all these macro stuff that affect everyone.
Yeah,
but
so
then if you look at
the macro,
you look at the details, right? I just compare the three that I heard of, like I know, like in the same space, which is JD and Pinduoduo. I'm not looking at their fundamentals. Just pay attention to the price first. Just looking at the price movement for this year to date. So Pinduoduo is actually up 52%. JD down 15%, and Alibaba was down 27%. So if the recession is so bad, I believe it should affect everyone. But how come Alibaba is penalized more than the other two? Is this, can we attribute all of them to recession, or is there something that Alibaba just didn't execute as good as their competitors? And this one I think will be very important, because if they are bad at their execution, 3-5 years later, it could be like way behind all these competitors. And Lazada also, I don't think they're doing that well.
Yeah, so because of the revenue mix, like look at Alibaba and Tencent. Alibaba last quarter revenue flat, Tencent revenue down 2%. So a big portion of the revenue comes from advertising. Because of the macro environment, people don't want to advertise. Like in the Taobao, you want to sell any products, it's actually free. But you want to rank higher in the search, you must pay money to advertise. That they call the customer management revenue. So the CMR declined 7% because people don't want to advertise. Then for Tencent also, because businesses, they think the outlook is bad. They just want to survive. They don't want to grow their business. So advertising revenues fell by I think 15-20%. So they got hit because of the advertising. For like Pinduoduo, actually they don't really exercise. Pinduoduo, the revenue very explosive, up 60%. That's why Pinduoduo 3x from the lows. Pinduoduo is the best performer during this period because of the COVID lockdowns, right? People don't go to office, I need to buy makeup, I need to buy clothes. Then for Alibaba, their Taobao and Tmall, a heavy portion of their customer demographics is the working class office lady. The office lady is at home, they don't buy all these things, so they get hit also. But Pinduoduo, they are selling basic needs like rice, vegetable, and also medical supplies. They can all order from Pinduoduo. That's why Pinduoduo, the business is still very strong. In fact, because of the lockdowns, right, people double on their spending on food. They don't want to run out of the food supply.
But what about like previously, because before the government crackdown, Alibaba has this whole monopoly thing. But after the crackdown, it has lost this immunity already. Then wouldn't like JD.com, all these, the competitors catch up to Alibaba, then it will reduce the market share for e-commerce and for like cloud computing?
Yeah, so in the past, right, basically there's only two camps, the Alibaba camp versus the Tencent camp. So there's this pattern called 二选一. For example, if you are shop, you're doing food delivery, you are the Tencent camp, then you can only use the Meituan 外卖, Meituan delivery. If you are Alibaba camp, you use the Alibaba, the 饿了么 delivery. Same for your payment system, you use Alipay or you use WeChat Pay. So they force the merchant to choose one camp. Then during the crackdown, all of these monopolies all destroyed already. So it becomes for like a Royal Rumble. So all these markets are instead of just two players, right? All these different segments, right, now got 3 or 4 players. Let's say, for example, groceries delivery. The Alibaba got the 淘菜菜, 新鲜盒马 do the groceries delivery. Then Meituan also do groceries delivery. JD Tata also do the do the groceries delivery. So three players. Then community buying also. Pinduoduo last time was the only player in the community buying. Now JD also go into the community buying. Meituan also go in. Alibaba also go in. So last time Alibaba only need to fight against one player, so they can split the market share. But now one Alibaba need to fight against JD, Pinduoduo, and fight against 3. That's why competition is increasing. That's why Alibaba, the margins also drop. Then the revenues cannot grow anymore because of the increased competition. But I believe that the competition is now tapering off because gone are the days of burning cash to capture market share. Because now all these companies like Tencent, if they place out JD shares, then next year they'll be placing out the Meituan shares. They want these companies to be independent. They cannot raise cash from Tencent anymore. So they have all started to turn a profit. Like JD turned a profit last year. Meituan, this recent quarter, just turned a profit. So all of them, they are focused now on defending their market share and turning profitable. So I feel that going ahead, competition is easing off, but the macro environment still affects Alibaba and Tencent, the two dragon head, the most. Yeah.
I wanted to get your opinion on, like, do you have any regrets? Like when you look back into the episode, right? Like the Alibaba episode for the last 2 years, like what was your like maybe biggest lesson and what's your biggest regret? Don't talk about like, oh, I want to buy later. That one is not a regret. That one is like everybody also want to buy later, right? I think if you ask anyone, they also want to buy Tesla later. So like what's your
you ask me, honestly, whether I got any bit of regret going all in on Alibaba. If I tell you no, I'm lying. Of course, I cannot machine call and from 14,000 shares I become 9,000 shares. Of course, I regret going onto Alibaba. But my biggest regret is I underestimate the stability of the Singapore market. So Singaporeans always complain, Singapore no good. Then the economy is all the dinosaur company, like the REITs and the banks. So previously, what happened is actually I had 3 shares in the Singapore market: DBS, Popnex, and the HRNet. So I sold my DBS because I bought it at $20. I sold at $30, take profit. I bought my first batch of Alibaba. Then Alibaba went down. I sold my Popnex. I buy more Alibaba. Then I sold my HRNet to even buy Alibaba even more. Then it crashed even further. So all my 3 mega cannon, I fire already, I still die. So if I could turn back time, right, I will only fire maybe 1 or 2 cannon. I will keep one, or maybe all 3 shares, right? I don't sell all. I sell half my DBS, half my Popnex, half my HRNet. So I believe that I was too aggressive, too greedy. Then I got punished. I think I should have been, if I slap myself, wake up your idea. Then I go back to time, right? I will keep half in Singapore market for stability and half in China market. Yeah, that's my regret. Not having some Singapore exposure.
How do you make sure you are not in the echo chamber? Like for Tesla, I know last year a lot of people listened to Chicken Genius. Then when he stopped talking, right, everyone suddenly wake up. But for you, how do you like challenge yourself not to? How do you tell yourself that Alibaba is this good company and not a bad company?
So for me, right, I really do my independent thinking, my due diligence one.
But how do you make sure that your due diligence
for
is
example, my due
affected?
diligence, right, is I really read the annual report. 200 page, I read from page 1 to page 200. I give you an example. I'll be doing a SE deep dive, 50 PowerPoint slides. You know, a lot of YouTubers in the US market, they complain that China shares is VIE, variable interest entity, that this is a fake structure, it is a scam. But they themselves, they promote Tesla, Palantir, SE. Do you know that SE is also VIE structure? I read the annual report, then I know that half of the SE, the earnings, comes from VIE structure, because for markets like Indonesia, Thailand, and also Taiwan. They cannot have 100% ownership. They have to have local ownership. Then through the VIE structure, then they can control the entity. So you must do your own due diligence. You must dive very deep. Then you know the true fundamentals of the company. Once I have the true fundamentals, then I have the conviction. Then secondly is I don't join any of those group chat like Tesla. Last time I joined before, my friend go and invite me on WhatsApp and Telegram, the group chat. I see, why? Buy Tesla. What I very angry and why I quarrel with the Tesla bull in the investing note is because in the group chat, right, they'll ask everybody to buy. Don't buy, then you have fun staying poor. They ask their friends to buy, they ask their relative to buy, they even ask their colleague to buy. In the group chat, they say, hey, last night I convinced my colleague, he also bought the China, the Tesla chain already. I invite him to the group chat. So the group chat, more and more people, then more and more Tesla bull inside the group chat. So I leave the group chat. Then my character is I very strong with my view. I believe Tesla is undervalued. Then through my fundamental analysis, right, then I stick to my view. Because of this, right, I quarrel with a lot of my real life friends. Actually, I block more than 10 of my real life friends because my real life friends, they know that I'm an investor. Then they come in and ask me advice on crypto and Tesla. They keep selling me the idea that Tesla will change your life. You can 5x, 10x your money. Then I keep telling them my bear thesis. Then they quarrel with me. I quarrel with them. Then end up,
But actually,
I don't want to quarrel, I block them.
ML, I wanted to ask, right? So personally for me, some perspective, right? I wasn't from the investing node era. So I don't really know what happened last time. But it seems like at least I was in Bunti's group and you have a few people that out there to get you. Like the way they speak is a bit unhinged.
Yeah, from the investing node one. They also in the investing node and in the Telegram. Because investing node, a lot of people use it also.
I wanted to ask, right? So actually Adam Khoo, right? He himself is also quite bearish on Tesla. He even shorted Tesla and say that, people will like F your mother or something because you shorted Tesla. Something like that. But I don't really see as many people that like quote unquote hate on Adam Khoo though. Did you get what I mean? Like why is that so
I'm very
peculiar?
childish. Like you ask Kelvin, actually I go to his channel that I say I will leave a comment. Short Tesla, let you die. Then I did expect, actually Kelvin reply to me. Well, I'm very childish. Actually, although I'm 40 years old, right, but my behavior is like a kid like that. Because the Tesla bulls they always make fun of me, like on the social media, they so-called like cyber bully me. They expose because last time in the internet world, like hardware zone forum, you're anonymous. Then they expose my name, my picture, and my address some more. That's why they can that's why then they expose me. That's why I got banned. I got banned in hardware zone, then I got banned on investing node. That's why I end up on YouTube. And so far YouTube haven't banned me. But my character is like that one. Like for me, I shorted Tesla twice. First quarter of 2021 and the middle of 2022 this year. Then you see the short also I kinda burn on Tesla. I took 8% loss. I shorted Tesla because I believe that quarter the earnings will be very bad due to their exposure to Bitcoin. But end up I was wrong because Elon Musk actually sold off their Bitcoin position and the earnings was better than expected. So immediately after announced results, the earnings and the Tesla stock rally, I covered my short. Then I got burned. I lost 8%. I think it's like $4,800 US. So I also got show you the screenshot. I shorted 100 shares. So on the Tiger account, when you short, it's negative shares. So for me, right, once I form a view, right, I put money on the view, then I will keep chanting the view. Alibaba, Tesla. But then even on my shorts also, I say the best trade of the year in my view is long Baba, short Tesla. So I'm quite childish in that sense. I would say like short let you die, short Tesla let you die.
But I think I have one like opinion if I can share is like sometimes I mean on the internet it's already very bad place, especially all those people that hide behind an anonymous account, right? Like they don't even show you their identity and then they hide from like 他们在暗你在明. So there really isn't a point like so now you see you meet Kelvin, then Kelvin don't have any comments to him like what he says short Tesla short until you die. Kiki.
No, I rather Tesla stock price go down than go up, to be honest. Right? Like if you are a buyer of good company, you would prefer it to be cheap. So I wouldn't mind like him saying that Tesla to go down. Because I know that the fundamentals are good and they want to short the short.
Yeah.
But I just want to circle back to Alibaba a bit. No. So like, okay, you mentioned that Alibaba, the market share the e-commerce space market share is sort of like tapering off. But what if you are wrong and like this is the correct value of Alibaba, and if market share, if they continue to cash out, right, wouldn't like Alibaba price no longer go back to like 200 or 300 within the next 10 years or whatever?
Yeah, so like I read some research report and some also actually as an Alibaba investor, I also read those Alibaba bear thesis. So for one of the bear thesis is that their market share will be eaten by the Douyin, which is the ByteDance, because short form video is expanding rapidly. Like now you see YouTube Shorts, Instagram Reels, the world and the Tencent, they're also going to short form video. And short form video, they actually tie up very well with the live streaming. And now you see the Facebook, and even Singapore context, people, they sell the Fa Cai Mao, they sell fish, they sell things on the Facebook live streaming. So the consumer habit has changed already. So the bear thesis is that the Douyin short form video and live streaming will eat away the Alibaba market share, and they will no longer be the market leader. And if that happens, my Alibaba position gone case already. But my personal view is that live streaming, they will take a big chunk of the cake, but they will not take the entire cake, maybe 20% market share. Let's say every month we spend $1,000. $1,000, I believe that we will not spend $1,000 all on the online streaming or the short form video, support those influencers. We will still go to the physical stores to cut our hair. You know, that you want to buy a shoe, you still must go to a shopping center because you need to test your shoe size. Then some things you'll buy from the Lazada and Shopee. Then only a 10-20% of your spendings will go to all these live streamers to support them. Then for Alibaba, right, actually they are also trying to compete with them. In fact, they are now trying to groom 300,000 influencers to also fight through live streaming, because their Taobao Live, they also have the live streaming also. So they are burning money to subsidize all these live streamers. Then they are building 1,000 studio for those to encourage those live streamers to share the studio and to do live streaming. So I hope that Alibaba will sponsor me. Then I can travel to China. Then they give me a studio. Then every day I talk about Alibaba and promote Alibaba. I don't know. So yeah, so they are pushing a lot of these influencers. So the future better, right, is that all these influencers will represent the different platforms and to fight for the market share. So it will be very competitive. But I believe that Alibaba, like just like you believe that Tesla is not only an EV car company, it's still got other different segments, or the energy, the robo-taxi, and also the insurance. So Alibaba is not only e-commerce, there's also AliCloud, there's also China Logistics, and other growth channels. Like Southeast Asia actually is still rapidly digitization, and we are changing our habits to shop more online. So I believe that the China core e-commerce as long as they can hold their market share, hold it there, I'm happy already. I think China, not much growth for Alibaba, but Alibaba must find their growth in the other business segments. Yeah.
Discussion.
I just want to comment a bit about like the e-commerce. I know that Alibaba can continue to grow, but I also can say like for other companies that can also continue to grow. So I think it will always be this battle. If I'm not from China, right, I wouldn't choose Alibaba Cloud. So I think there's no way for cloud to grow in that sense. So Google and Amazon have already taken the pie. I think it's very hard for Alibaba to gain traction in the cloud computing space. For e-commerce space, then the thing I'm worried about is like right now it feels like Alibaba is trying to defend only. It's not it's less trying to grow. Unlike for Tesla, it's still a growing pie, sort of that. So that makes Alibaba sort of a growth company into a value company already. So there it's hard to see that kind of big growth. So that's why I feel like it's a bit hopeful to think that it can go back to 300 in the short term, I feel.
Yeah, so for my view, right, Alibaba is like more of a value play. The core commerce business no growth already. So even I'd be optimistic, the future maybe just when the economy start reopening, maybe just long-term 5 to 10% revenue growth rate only. So it's like old cow. But the Alibaba, the cash flow is super cash cow. Every quarter they are generating 5 billion of cash. That's like 20 billion of cash. The market cap is like 200 billion.
Like back to ML, right, on this China topic. You talk about like the disorderly opening of China, and they had 3 years or 2.5 years to prepare. I think 2 parts to the question. Number one, were you disappointed? Number two, does it actually affect your thesis that because you're so bullish, not only on Alibaba, right? I mean, one of the theses for being bullish on Chinese companies is because you think that the Chinese economy will grow, the government will do things that are good for the economy, and they're able to sit on that tailwind, correct? Like for the economy to continue growing and to harvest the good stuff. But then you look at it like that, how things are playing out in real time, people, medical facilities like that, economy going down. Like, how are you reading the situation?
Yeah, so originally my bull thesis for Alibaba, I had what my followers always ask me, what's the target price? Alibaba can go up how much? So I tell them, it's $200 target price for 2023 on a basis that is a orderly reopening, like Singapore, like that. Phase 1, phase 2, phase 3. And I say the worst is over for Alibaba. Then it can go to the moon next year, blah, blah, blah. But then now, because of this disorderly reopening, of course, I'm disappointed. Then instead of a smooth recovery, we might see short-term pain before the real recovery. But eventually, once China reopens, the long-term fundamentals is still the same, because I'm a believer that within the next 10 years, by end of 2030, the GDP of China will overtake the US. So I believe China, the country, has the fundamentals because it's a real economy. It's the manufacturing hub of the world. So I'm still confident in China over the long term. Just that short term, there is a lot of headwinds. There's a lot of impact from the negatives from the messy reopening.
Ken, thanks ML for the conclusion. I think we hope you guys enjoyed the discussion this time around. So this week we tried to put both Alibaba and Tesla on the hot seat. And if you guys have any more other both bull and bear theses that you want to address, please feel free to leave in the comment section down below as well. Bunty, you want to say something?
Before we end the call, I just want to ask Master Leong, I think last podcast I did with you, just 2 of us, right? Yeah. We talked about something like family, setting up family, and I think you were quiet about that. But after that, you go and post a photo of yourself with your girlfriend.
Yeah,
you want to share anything with us on your more like personal life?
So like just now you mentioned about those people who hate me, right? So actually I post me and my girlfriend the picture on the community tab in the YouTube. Then very fast, the investing note, the hater, right? They go and CSI. They found out what is my girlfriend working as, because she works in the hospital. Then got wear the uniform, all this. So they post, ML got a girlfriend that's working as a doctor. She works in the hospital, but she's actually not a doctor, she's a nurse. Yeah, so actually for me, right, I'm going 40 already. So the one thing about eat full, nothing to do, right, is you will become lonely. I've been lonely for quite some time already. So I really want to settle down. I'm to the age that I want to have family, have kids. Just like Calvin and Vunti, like you see that I already said I'm very childish, right? Then I believe the only way to become from a boy to an adult is to become a parent. When you have, I see my friends, I see my brother, all this. When you have a kid, your thinking really change. You really have more responsibility. You want to really provide for your family. Then that's why I in the beginning my YouTube is very talk. Now I start to be more serious already. I do the live stream, all this, because if I want to start a family, have kids, then my income must increase, because I need to support my wife and kids also. So thanks for asking. Yeah,
all the best on that.
Great. I think I forgot to mention this just now in the earlier part. I'll edit it to the front. Remember to smash the like button.
Like button.
Yes, click subscribe alongside if you want to see us continue bringing in
then also that you all got any, but Chicken is single, so Chicken was looking for a girlfriend, so that
I think I need a course first.
BTO.
I need to,
because Chicken asked me what is low risk high return, sure win sure what. Buy HDB flat, subsidized, then got government grant, sure what. But all of us, we got access to HDB. Only Chicken don't have access because he's single and he's below 35. So Chicken needs a girlfriend to buy BTO. So if you all can introduce a nice girl to Chicken, please feel free to leave in the comments and smash the like button. Thank you.
Or maybe I can buy a condo myself. But we hope you enjoyed the discussion thus far. And we'll see you in the next video. Goodbye.